Alright, good evening. December 18th, 2017. Again, I'm back with the Euro. Right now, I'm going to do the Euro only, and I'm going to keep it under 5 minutes. So, yesterday we spoke of price going to a minimum of 1810. So, and as you can see, I was in at 1747. I spoke about this last night around the same time. My minimum target was 1810. Once price reached 1810, I actually exited half of a contract. So I let price go above. If prices would have continued and found more resistance at the 1855 level, I would have never got out. But once I saw the spike end at around 1830, I kind of let it come back, and then I exited at it was like 1812 or so, because I had a feeling that it would not bounce and continue up. So I exited half. I kept my stop below 1737, and then as price found a bit of support back at the 1790 level, I then raised my stop up to 1775. So I expect 1790 to continue to hold and price to eventually get up to this 1855 level and above. If you look at this same market on a larger time frame, then you will see here that if this is correct, then this is the wave 2, this is the 1, this is the 2, and now you're going to see a 1, 2, basically 3 most likely will go more towards the 1900 level, and that should happen within the next couple of days, hopefully between Wednesday and Friday. That's my anticipation. So if not, the alternative to the downside will be that this is the A, this is the B, and then this is A, B, and then you have a 1, 2, basically 3 to the downside. So it'll be A, B, C for C, basically. And C most likely will end at around between 1640 and 1620. So that'll be wave C of 4. So this 4 wouldn't be the 4, this would be A, this will be B, this is A of C, then you'd have B of C, and then you have a 1, 2, basically either 3, 4, 5, or A, B, and then a C of C, which can go near the 1640, 1620 levels. That's my alternative. I'm not going with my alternate. I'm going with my primary. My primary is that we're headed into wave 3, and this is 1 of 3, 2 of 3, and then you have a 1, 2, and then possibly 3 that should go to around at least 1910, and it should be a breakout move within the next couple of days. So that's my expectations there. I'll end it there on this one. Yesterday I actually took about 60 pips on this particular market. You can easily go back to my video yesterday. I was in the market at around about right here, 133.34, somewhere around there. I took this spike all the way up, and I said price would find some resistance in this particular level. I said about 134 even, or 134.20. As you can see, it came to 134.20. I knew that the 134.26 would hold resistance. However, I do anticipate, if the euro breaks out, I do anticipate the pound to do the same. So I may get back in this market going long, but I want to see if price is going to test this 33.62, possibly go a little lower to around 33.50, and then shoot up. If it does that, I may put a buy order in. If it hits it, no big deal. I mean, then good. If it doesn't hit it, no big deal. I'll put my stop at around about 30 pips below, about 133.33 at this particular area here. And if it breaks out and goes above my trend lines, I know I'm in for a good trade that should eventually break out of 135 and continue higher. That's going to do it for today. I want to keep this one short, and it's just these are the only two markets that I'm pretty much following anyway. I'm out of the pound. I may get back in it. I'm most likely going to get back in it, and as you can see, My minimum target was hit. I took half of a contract out, so I'm only in half. If price breaks above the 1810 and it stays, that's when I'll add back on to my contract again to go one full contract, and it should continue higher. I'm expecting a move above 19 by the end of the week. So if my alternate is the actual count and prices go below it, well, at least I'll be stopped out at 1775, and then I can take a position to the downside. So hope this helps. I'll have another video for you guys tomorrow, but I'm only covering the euro and the pound for this week. So I hope it helped. Happy trading.